All right, guys, today I want to show you how I passed 3 Apex Trader funded accounts, and I'm working on my 4th one now. But what I want to show you is the strategy that I used. So if you're a person that really is dedicated and wants to learn and know and understand how to do this process, wants to become a better trader, then you should watch this whole video. But if you're one of those YouTube people that just likes to jump from video to video, hoping and looking for that quick fix, you're never ever going to be that trader that you want to be, because there is no quick fix to trading. It's hard, and you need to be able to study all the time and be prepared for anything that the market offers you. So with that said, I'm going to get into this, and hopefully this is something that helps you out, because I'm going to be showing you one strategy out of 3, and if you learn this strategy, I believe it will help you tremendously. So stay tuned. Here we go. All right, guys, before I get started with anything, I always like to give you a word of encouragement from the Lord. And today I'm going to be reading from Romans 10, chapter 10, verses 9 through 13. And it says, if you declare with your mouth Jesus is Lord and believe in your heart that God raised him from the dead, you will be saved. For it is with your heart that you believe and are justified, and it is with your mouth that you profess your faith and are saved. As scripture says, anyone who believes in him will never be put to shame, for there is no difference between Jew and Gentile. The same Lord is Lord of all, and richly blesses all who call on him. For everyone who calls on the name of the Lord will be saved. We do not gain righteousness by works, but instead we gain it by confessing and believing that Jesus Christ is our Lord. We're saved by sincere faith in Jesus and the grace of God. We must call on God to help us, but it's more important than just saying these words. If you declare Jesus is Lord but live an evil life, or live as if there's no consequences for your actions towards what you're doing for God, then you have not really believed in your heart. All right, it's the combination of both parts of the statement, declare with your mouth and believe in your heart, that offers salvation. So when you make a declaration from the heart that Jesus is Lord, and you really believe that God raised him from the dead, your desires will naturally begin to shift to a life that is being transformed by God. God bless you, my brothers and sisters. All right, guys, so let's get on with this video. Just wanted to show you the certification right here. And this is just showing you that I got funded here. And this is one of the certification certificates that they send out for you to see and show that you have passed this process. So I'm working on my 4th one, as I said. So right now, as I work on that 4th one, you can see I've been trading this account for 5 days now. I just made $500 today. And then you can also see that I need to get $53,000. And so I need basically another $537 to get to the profit total. So I have 2 days to do that, and I can easily do that. Well, not easily, but I should be able to do that within 2 days. All right, so as I get closer to my goal, I kind of use less risk, but in the beginning, I'm using a lot of risk. All right, so let's continue. Let's talk about this strategy that we talk about. So first of all, the red and green arrows that you see, they're fractals, and that's what we're going to be focused on today. We're going to be focused on fractals because there's a way that we're going to trade these fractals for you to make profit. So these fractals, they define the market structure, they identify momentum, they identify liquidity, they identify trend reversals, and they also identify support and resistance levels. They do a lot. All right. So we're going to talk about fractal zones. So on this chart right now, you see the fractals here, these green and red lines, but I'm going to take those off of the chart moving forward, because I already know how to use these and how to find a fractal and know where they are. They're mostly going to be these swing highs and swing lows. But let me show you first of all how you identify a fractal. So a lot of people don't understand what a bear and bull fractal is. They tell me that, oh, this is a bull fractal and this is a bear fractal. No, negative. All right, that's wrong. I showed this in another video with Bill Williams fractals, and this is the way that he describes the fractals. So first of all, a bull fractal is going to be a fractal that has 5 candles. And of those 5 candles, the middle candle has the highest high. And the other candles that are on the side of that candle are 2 lower highs on each side of that candle. That makes this a fractal. Fractals do not repaint. Once a fractal, always a fractal. Now, while the process is going, so suppose this candle is like this and there's like another minute left. This will show as a fractal. But if this candle moves up and closes above this level, then this no longer shows as a fractal because it is not a fractal. All right. And so then the next one will be a bear fractal. This is a bear fractal here. And again, we're taking 5 candles. And on all of these 5 candles, the middle candle, the one with the marker, has the lowest low. And the 2 candles on each side of it have higher lows than the middle candle. That makes that a bear fractal. All right. So these fractals can identify many, many things for you. All right. Many things. First of all, they're going to define the market structure. So the bear fractal rarely gets broken as the market is moving higher, but the bull fractal will get broken. You can see these bull fractal levels getting broken. So that defines the structure of the market as being bullish, because we're breaking the bull fractal levels. So you can just look at a chart and say, well, I know which way I want to trade, basically because when I look at the chart, we're not breaking these lower fractals. So I don't want to trade downwards. I want to trade to the upside because we're breaking these level fractals. So that defines the market structure for you. All right. So that's one thing that they do, and that's one thing that you can look at to see them. They also define momentum, because let's just look at this area and this area. So after this, you have 2 fractals. You have the bear fractal and the bull fractal. And then the next candles, they don't drop that far down. But the farther down to this level that you come, you have lost the upward momentum. So the farther you come back to this level, then you've lost a lot of upward momentum. All right. So that shows that you're losing momentum. But in this case, you haven't dropped that far back. You came down to this point here. The market has not lost that much momentum and then moved to the upside. All right. So you can see how it's showing you momentum. Again, if I was looking at, let's say this level here. So now this is where I'm showing that now we haven't broken this bull fractal, and it appears we probably broke a bear fractal on this side over here. So if we're moving to the downside, and I said, well, I want to trade to the downside, but the market started to push back, I've lost a lot of momentum as it pushes back to this level. True, now the market will come up and make double tops or make these equal highs and so forth, and that's where a lot of liquidity is. But at that time, you've lost momentum. You've lost bearish momentum. All right, so that's how this defines momentum for you. It also shows you support and resistance levels, because first of all, you can just definitely draw support and resistance levels on these wicks where you see these fractals, and that's going to define a support and resistance level for you. You could see how I'm drawing this level here. And now if the market comes back to this level, I know it's a support level, and then boom, looking to trade that level. So they definitely define support and resistance levels for you. If you were marking a trend line, you can mark it on these fractal levels. All right, so you have a level here and a level here, that will give you a nice fractal level to draw your, that will give you a nice trend line to draw your trend on. You can use them to draw that way, and you have, it shows you support and resistance in that manner. All right. And then they also show you liquidity, because these levels again are basically support and resistance levels. These levels are also levels where stop losses will be placed below, so are placed above. All right. So this is where the liquidity levels are. These are where you would see these liquidity grabs taking place. So these fractals are very important in that aspect. And then they also show trend change. Okay. The ways that it does that is this. I showed you the market structure. And if we're violating bull or bear fractals, then that's the direction that we're trading. If we're violating bull fractals, we're trading to the upside. We start violating these bear fractals, then we're trading to the downside. And then a trend always starts with a fractal, and it always ends with a fractal. Always, always, always. You will not be able to get away from that. So that gives you a lead on the market already. These little things that I've just told you. All right. So now we want to put this together to work out a strategy to trade this. So I took the chart. I took everything away from. I'm no longer showing the fractals because I already know these fractals. But the way that I trade these are fractal bounces. So here we're looking at a bull fractal bounce setup. I'm not going to get 100% deep into this. I don't want this to be a real long video because most people can only watch 5 or 6 minutes of a video and figure they learned everything. So I'm not going to give you that long of an opportunity. But what I'm just showing you basically is when you see these fractal levels and the market breaks the level like it did here, it broke this level. Once the market was up here, I already knew what I wanted to do. I wanted to have my pending order in to go long. All right. And the market came down, triggered me into the trade. As you could see, I put my profit target at the top of this candle. This candle also was a news candle. All right. Even with the news candle, we've broken out of this fractal level, and now we're coming back to that level. All right. So we're coming back to that level. You could see I'm set up. You can now see where I got triggered into this trade. All right. So I'm triggered into the trade. And now I can set my target. I set my target for a 1-to-1 measured move. I'm using the fib price extension tool to find that 1-to-1 measured move. And this is also part of Ichimoku observation price theory. Okay. I can find that measured move without using the tool, and I'll show you exactly how to do that really quickly. So you have points where the market moves in waves. It moves in these N waves. All right. So I would say we're moving like this. All right. And then you could see the market would be moving like that. These would be these N waves. Well, how I find these targets would basically be this leg here. Let's say this leg is this long right here. I would take this. Let's say this is, if we're using Forex, let's say this is 100 pips. Well, from this point all the way up to here, that would be 100 points. I mean, 100 pips. Okay. So on the market, if we're trading futures, then we'll say 100 pips, or if it was, sorry, 100 points. And then Forex, we say 100 points. 100 pips. Sorry, I'm getting backwards real quick. But anyway, that's what that shows. This leg is going to be equal when we figure it out. So it would be point A, point B, C, and D. We're shooting for D. Some people also call this 1, 2, 3, shooting for 4. It would be a 1, 2, 3, shooting for 4. And I always shoot for the first target of 2. All right. And I always trade at level 3. Level 3 is going to be automatic if you trade the levels that I'm showing you. It's going to automatically be those. So you can see we got triggered into this trade. And then we got stopped out of this trade for a small loss. So basically my theory is always enter as close to the bottom of this zone as you can as possible, because what that does, it eliminates a lot of that risk that we're going to have. So had I entered up here right away, then I would take a bigger loss at times. All right. But if I can get the trade as close to this level, I limit a lot of my loss, because I'm going to probably put my stop loss slightly below these wicks here, a little bit outside of the zone okay, where the highest high is or the lowest low, right at the zone. I'm going to put it at that point where these wicks stand outside of the zone. So therefore, I take a smaller loss by trading as close to this level as possible. Now, sometimes I'm here because it all depends the size of the zone. If the zone's too big, then I don't really want to be trading right at this level. I want to give it a chance to give me a price action entry. All right, because I don't want that big risk with the zone. But right away, immediately, what happens here is I get back into the trade. So I put another order in here, and then I'm going to get triggered into the trade. I get right back into the trade because nothing was violated. You know, my level was a little off because the market dropped a little lower than my stop loss was. So therefore, it stopped me out, and then it made a new level for me to place a stop loss, and that's what I did. So therefore, you place that stop loss there. You can see you got triggered into the trade. As the market moves higher, you make your profit. You can see where we are. Price failed to reach this level. This is the 1-to-1 zone, and I closed out the profit. As you can see where we are, we closed it out here. All right. One of the biggest things that helps me to take profit is the level. With these levels is the volume. So looking at volume at these levels. So first you have a clear resistance point from the big news candle, but notice how the volume leveled off and then started to drop at this level. So let me show this to you really quickly. Had this big news candle, and then you could see the volume dropped off. But as we came up to this point, the volume flattened out here. From this point up to this point, it flattened out. The volume did. And then the volume actually started dropping. And you could see that means we're not going to break through these levels. If our volume is dropping off, we're probably not going to get through that level. We need more volume to get through that level, not less volume. So that's a good indication that I should probably take my profit. I'm not going to reach my target, and therefore I take the profit. And then you could see, just based off of what I told you guys, that flattened out up here, and you can see that the volume dropped off and the price dropped off, coming back into this zone. All right. So that's a big sign. You want to take your profit when you notice volume. Volume precedes the price. So in this case, the volume alerted me prior to the fall that we see right here. So here's another trade setup. All right. So again, looking at this setup, we have already put our 1-to-1 measured move in because this is going to be 1, 2, 3, and then we're shooting for 4 down here. So that's where we would be shooting for our profit. Let's move this forward. You can see we're triggered into the trade. At this point, we got a small profit, around 250. Market comes down to the midpoint of our 1-to-1 measured move. Market moves a little farther. We got a nice little profit. Again, we got our 1-to-1 measured move. This leg right here is going to be the same if it goes that far. As you can see, the volume was increasing, moving down to that level, and that's good strength. But now it's starting to decrease. That's good strength moving down. That gives us more power to push downwards. All right. Then the market hits our level, hits our target. All right. So that was an exact 1-to-1 measured move. So I'm going to do another video and talk more precisely about the 1-to-1 measured move. But what I want you guys to understand and get clear is, so now here's how you would look at the market now. This is a bearish move. We're moving to the downside. So this is a fractal level right here. So what you would do now is draw a fractal here. I mean a fractal zone. I love the wicks. And now you would look for the market to push up into your level. And then you would trade to the downside. All right, that's what you would look for there. So this is the same thing here. This would be a fractal level. and you could see the market dropped. Once it drops below that fractal level, and then we get far enough away, or a little bit of distance away, we could draw that zone, and then you could see the market pushed back up into that zone, and then it dropped to the downside. Then we made a zone here because we had a fractal here, and it was a small zone. We broke that zone, and this is where we had the trade, and then the market dropped to the downside. But as you could see, just looking at what I'm showing you, there was a fractal trade here that could have been taken. There's the one that we just looked at, and then there's, well, I don't know if this one developed, but this is another fractal that you would draw and look for the market to push back to that level and then trade. All right, so that's how you look for these trade setups. That's just the zone you're going to set up, and that's going to be easy for you if you understand the fractal levels. And if you don't, then you can use a fractal indicator that's going to show you the fractal on the bottom here, and then the fractals on the top here. So it'll show you each fractal and so forth. Now, when you have too many fractals in an area, so you got a bunch of fractals in an area, then you know the market is ranging. You're not really moving. So you got to see that top fractal and that lower fractal to see which one we violate, and that determines that we're moving out of that range. All right. Here's another trade setup. Again, you could see this fractal level here. I made a zone. The market violated the level, pushed up into the zone. I already had a limit order set. It was a small zone, so therefore I know I could do this, and I have a 24 tick stop loss. It's going to change because once I trigger into the trade, I probably, once it starts to move, I move it closer to the zone. So let's see what happens on this. Market triggers us into the trade because we're trading the zone. We're not waiting on price action here. I traded the zone because, again, it was a small zone. So therefore, I didn't have much risk to trade right at the zone. And then we're seeing a little bit of drawdown there. But we're looking for the market to go to the downside. So we want to look for that 1-to-1 target. So what we would do now that we have this point and we know we have a point there, we would have point 1, point 2, point 3, and then we're shooting for 4. 4 would be this 1-to-1 target right here. Again, all that's telling us is this first leg right here, it's 20 points. So this, I'm just saying, so then we know this leg roughly would be 20 points also from this, well, actually from this top here, it would be 20 points. That would be our target. All right, and that's how we would shoot for our target, 1-to-1 measured move. So once you have you can start looking for your profit target and setting it with your fib tool once you have that point 3. 1, 2, and 3, then you shoot for 4. Always need to get through this 2 level though. So when you're trading down, you want to get through that 2 level. If you're trading up, you want to get through that 2 level that you would have here. Then you can see the market came right to the 1-to-1 measured move exactly and found support at that point a little bit. All right, so it came exactly to that level. Can't work that out much better than that. So the 1-to-1 measured move is going to be a great area for you to look for profit. Market's not always going to come right to that level. Sometimes it's going to miss, and sometimes it's going to go much farther. But that's a 1-to-1 measured move, expecting the market to do what it did previously. So again, here's another trade setup here. Nice fractal, big zone, bigger zone, have everything set, and you can see where my stop loss is with the 24 ticks. I usually have a 24 tick stop loss. That's around where I want to be, and it lines right up with this level up here where these wicks are. Takes me a little bit outside the zone. So we're looking for the market to push back up into this level and then trade to the downside, our 1-to-1 measured move. All right, whoops, sorry, messed that up. 1-to-1 measured move would come down, back up, and then down. So actually I'm wrong here, sorry, that's the move that already took place. So where we would be is this, come up to the target, and then once it starts to move down, we would have points. We have that 1 point, 2 point, 3 point, and we would now shoot for the 4 point, which would bring us down in here. And I'm going to show you that right now with this opportunity. You can see now we found our point. We're triggered into the trade. You can see our stop loss, and this is where our target is currently. I don't believe that's the target because we need to see that point. So I just have this target set until I find my point, and then I'll adjust that target. All right. So now, once again, since price created this 1, 2, 3 pattern, this 1, 2, 3, because we got this drop right here that broke these lows. So now we know we have 0.3. Now we could set that target that I just talked about. And that's where that target is. So now that's where I'm going to be shooting for with my trade. And you can see we got a nice little small profit here. I only trade with 1 contract. Sometimes I trade with 5 depending on what I'm doing, okay? But 5 is the most I ever use. And then you could see, again, guys, the market came right to the 1-to-1 measured move. And it makes this N wave coming down to this level. The market moves in these N waves. All right, this is just market structure. And it made a 1-to-1 measured move. Look what it did at that measured move. That's how strong these measured moves are. All right, very strong, because right at that level, it touched that level, and then it made an indecision candle as it wicked off of that level. Easy way to find where you want to shoot for your targets. Now, it's going to be hard sometime to get your target, because things like this might take you out of the trade where you say, oh, I can't withstand that. It's going out of the way, and it takes you out of the trade. It's just shaking you out of the trade. All right, so here's another opportunity. As soon as the market broke through here, I already knew this was a fractal level. Already setting everything. Don't really know the full target yet. And I can always look to my left to find real targets, and then set it up afterwards. And then we could see what happens. But as you see, market pulls back up to this level, triggers me right into the trade. I'm triggered into the trade. A lot of times it all depends what I'm doing and how big the zone is. But sometimes you can wait, because you want this to push up as far as it can, because the farther this pushes up, then you can put an order below it, or an order below it. And that eliminates risk right here. Okay. And then you can see what happened here. I got stopped out on this trade. Actually, I was in a small profit at about 1-to-1, and I should have moved to break even. So I got into this trade and then got stopped out as price moved a little higher, took me out of the trade. Actually, right here, we had some profit. And like I always say, I should have know that these equal lows, and should have looked at, we didn't really get through that level and pushed back up. Should have probably broke even, but I took a loss right there. And then again, I got right back into the trade. And the reason why I got right back into the trade, guys, is because this was a big indecision candle that rejected off of this upper level. So nothing really changed for me. So I got right back into the trade. I'm triggered into the trade again. So the market didn't violate that zone. I just didn't have my stop loss. It just got my stop loss. It didn't violate the zone. So therefore, I'm going to stay with the direction of the market, trending to the downside. I'm going to take this trade because it's inside my zone. It's the best spot for me to make a trade. Then you could see what happens on this trade. The market does not reach the 1-to-1 level again, but we make a pretty good profit. This profit that we lost here, we made that up well and some. So it was no big deal to take that small loss right there. All right, guys. So basically, guys, this is my strategy. Again, I'll be posting more videos. I trade. There's 3 types of strategies that I trade, but this is one that I trade. It's one of the better strategies, one of the best strategies that I do trade. So therefore, I wanted to show you this. And once you start to realize and understand these fractal levels, you'll be able to make these same types of trades. So hopefully this is something that's helping you out, guys. And if it is, please do give me that like. Let me know that you like this content. Also, guys, subscribe to the station and hit that notification, because I will let you know when other videos are coming out if you hit that notification button, and then you'll be able to see things that I'm doing, because I will be doing live sessions also where I'll be streaming live talking about these types of things. All right, guys, so hopefully this is helping you, and until next time, have a great one. God bless. So long.